bad morning for the rand though, because we've got it trading 7 rand 1 cent at the moment, but it did trade as weak as 7 rand 4 cents. So back at March's levels.
Morning, Stephen. Yeah, the rand's trading at close to its worst level since mid-March. It really all began on Friday, or in fact, actually a bit earlier. Since China announced that tightening in monetary policy, we've seen commodity prices soften. On Friday, resurgent concerns over debt in the euro area saw the euro take a bit of a knock. And so given prevailing market conditions, which seem to be more risk-averse than risk-on, it's not surprising perhaps that we see emerging market currencies, but particularly very liquid ones, such as the rand, taking a bit of strain at the moment.
So you mentioned those commodity prices. Are we also underperforming some of those commodity-related currencies like the Aussie and the Canadian dollars?
We still are, Stephen. The rand has been weak against most currencies this month, really only at this point seeming to hold up against currencies like the Brazilian real and the Turkish lira, and that's because they're also very liquid emerging market currencies, so we're in the same basket at the moment. But the rand certainly has not been a very good performer against a number of currencies this month.
How would last week's data, and particularly the MPC decision on Thursday, have affected the rand? Because I assume had the Reserve Bank indicated it was going to tighten monetary policy sooner rather than later, we would have seen some strength. So do you think the neutral stance from the Reserve Bank has added to the rand's weakness?
I would be hesitant to ascribe it to that, Stephen, because that was widely expected, and no one had anticipated that the MPC would start to raise rates immediately. And in the event, it seems that the market interpreted the statement as being more hawkish than anticipated, so that should have been positive for the rand. I think the real story is that at the moment the rand continues to be driven by international developments, and particularly how investors are feeling about risk at the moment, and it's quite clear that they're not feeling in a very risk-on mood.
Well, we're getting consumer inflation numbers out tomorrow, so we'll see whether the Reserve Bank's decision has been vindicated. March is reading for CPI 4.1%. Now, with the Reserve Bank expecting inflation to hit the top end of the target by the end of the year, I would expect inflation to start accelerating quite fast from this point.
Well, that's certainly going to be the key element that people will be looking for in the CPI that's going to be out tomorrow. As you mentioned, it's the CPI for April. So the month before that, inflation ticked up to 4.1%. We're anticipating that it would have moved up to 4.4%, but that's still comfortably in the midpoint of the target range. So in order for the Reserve Bank's forecast to be on target, we'd expect to see quite a dramatic acceleration in inflation beyond that point. But, you know, there were also some very high petrol price increases in March and April, and so it's not unlikely that we're going to see that sharp acceleration in CPI headed in.
Well, we have retail sales data for March coming out also tomorrow. Previous reading, the February reading, 5.6%. Would you expect any moderation in those retail sales numbers as the year progresses?
Well, Stephen, we've penciled in a rate of 6.1% for March. It's slightly below consensus estimates, which are looking for 6.3%. But, you know, retail sales had unexpectedly slowed down in February, so we are hoping to see a rebound in those numbers. But you have to remain cognizant of the fact that consumer confidence was down in the first quarter. So, you know, there is some downside risk to that forecast, but certainly we'd be hoping to see a rebound to about 6.1% for March.
We've also seen mining and manufacturing data out as well for the first quarter and for the month of March, and it's this all leading up, of course, to our first quarter growth figures. What's this all painting for growth for the first quarter of this year? Because some of those figures looking not too bad at all.
Yeah, Stephen. I mean, on the whole, I think the economy is continuing to gain traction. The numbers that have come in through have been a bit softer than they were in the fourth quarter of last year, but still at this point, it looks like all sectors should have continued to contribute positively to growth, and that is in line with our view that the economy is going to continue to gather speed. We're looking for an annual growth rate of 3.7% for this year. So far, nothing in the numbers has derailed that view.
Well, we have minutes coming out of the Bank of England tomorrow, also the Fed's minutes. Are these going to be key for the markets? Will investors be looking into those minutes for any hidden messages?
Well, I think particularly they'll be looking at the BOE minutes, as always, because they refrain from holding press conferences after their announcements and announcing details of how members voted. So the BOE minutes always going to be ones to watch. Fed officials have recently hinted that they would be looking at tightening policy in the US. So I think what markets will be looking for at this point is to see where the UK, where the BOE bank is in this regard. We've already seen some movement from the ECB. There have been strong hints from Fed officials, and inflation in Britain has continued to climb quite aggressively. So these minutes will be quite instructive in seeing whether members are starting to lean towards a tighter monetary policy than is currently in effect.
Well, having breached and held above that R7 level against the dollar, what's next for the rand? Would you expect further weakness to filter through?
In term, we still think that the rand has a weakening bias. We'd be looking for it to move to 7.16 in the medium term. However, in the short term, the rand is looking a bit oversold, so we could see it retrace to about 6.84 in the short term, but then continue its weakening trend thereafter.